All right. Somebody here has asked a great question, um, which is the question is, how do construction loans work? So, this is really important if you don't know anything about mortgages and construction loans, because if you are talking to a true custom builder who is going to build a home on your property, you are going to have to get the construction loan. So, all Legacy Classic Homes does is build custom homes on owners' properties, their lots, their land. And so, as a builder, we never obtain the construction financing. There is financing called interim construction loans, which just means temporary construction loans or in between, because you ultimately will end up with a permanent mortgage. The construction loans are designed just for the construction process. The reason as a builder we don't obtain the financing is because if we did, we would have to then own the property. And we don't want to do that, especially when it's your 15-acre lot in whereversville. As a builder, you don't want to own that property. It's also a huge amount of risk for a custom builder to take on, even if you just owned a regular lot in the city. Why would a builder want to own that project and it's your floor plan design and maybe you want to do purple walls and who knows what in there, and then something happens and you can't close on it? The builder inherited a house that the builder may not be able to sell or sell quickly enough, and it's a burden for the builder. So for the most part, though, it just has to do with all these properties we build on are unique. People are buying lots all over the place, and so they have to get the construction loan. So as a consumer, if you are looking to do this, you have to obtain a construction loan. A construction loan, as I said, is for construction. It is generally a 12-month loan. They are interest-only loans, so you do pay interest while you are having a house built. However, it's interest-only, and it's only based on the amount that you've drawn up to the point of when it's billed. So let's say you're getting billed monthly interest payments. Sometimes they're quarterly, but let's just say it's monthly. Let's say you own the lot outright, so the construction loan was just for the cost of the house or the estimated cost to build the house. Well, in the first month, the builder might not have done much of anything. Maybe $25,000 has been drawn from the bank. Drawn's a term for them funding us money for work done. And when the time for that interest payment's due, they're calculating it off $25,000. So it's not a lot of money. They get bigger as you build the home and more funds from the loan have been drawn. So now at the end, the interest payment's going to be the largest that it's going to be because all the funds have been drawn on your $500,000 construction loan or $1 million construction loan, whatever it is. Again, most of these loans are good for 12 months, which is usually fine for the average house. And when I say average, something that's 2,000 to maybe 4,000 square feet or so. We start to get into houses that are bigger and bigger, and they are going to take more than a year. Most of the banks, I know one of the banks that we tend to refer people to, a bank in this area anyways, called First United Bank, they do have some programs that will go longer. Most banks will not go longer than about 18 months or so without having to do a renewal. So they will often allow you to renew the note or do an extension of that construction loan because, hey, if somebody comes to us and they're building a 10,000 square foot house, we cannot do that in a year, especially because the average 10,000 square foot house is not average. It is a nice luxury custom home that is going to take a while to build. And so, if you are looking at one of those kind of homes, then you just want to talk to the banks. You want to find out what their terms are and, how that's going to work. So I hope that explains it. That's pretty much the way a construction loan works. Now, when the house is getting finished and all the funds have been drawn from, the bank for the construction loan, now you either pay it off or you are refinancing it into a permanent mortgage. A permanent mortgage is your 30-year fixed mortgage, your 15-year, your 5/1 ARM, whatever type of mortgage you're getting. So again, construction loan, temporary, short period of time. At the end, you get a mortgage that's your 30-year note or whatever it is that you're doing. So hope that helps with the construction loan. I'll throw one little caveat on the end. The banks that we work with will also do lot loans. So if you're out there looking to buy property and you need to borrow some money for it, you can get a lot loan to buy the property. Then you can go back to that bank when you've got to deal with a builder to take out the construction loan. Hope that helps.